Ever wondered if that $1,000 sitting in your bank account could actually be the seed for real wealth? It absolutely can. In today's video, I'm going to break down 7 powerful, yet simple, ways you can invest $1,000 in 2025. And the best part? You don't need any prior experience. This is for the beginners, the curious, and anyone ready to make their money work for them. So, if you're ready to turn a small amount into a significant start, stick around. Let's get into it. First up, and my personal favorite for anyone just starting out, is investing in index funds and ETFs. Now, I know that might sound intimidating, but it's actually the simplest way to get into the stock market. Think of it like buying a small slice of the entire market in one go, instead of trying to pick the next big winning stock, which is incredibly difficult even for professionals. You buy a fund that automatically tracks a major market index, like the S&P 500. What does that mean for you? Well, the S&P 500 is made up of the 500 largest and most successful companies in the US. We're talking about giants like Apple, Microsoft, Amazon, and Google. So, when you put your $1,000 into an S&P 500 index fund, you're instantly diversified across all these powerhouse companies. If one has a bad quarter, another might have a great one, which helps to smooth out your returns. Historically, the S&P 500 has delivered an average annual return of about 10%. While past performance is no guarantee, it's a proven, long-term strategy for wealth creation. It's the ultimate set-it-and-forget-it investment for beginners. You get broad market exposure, low fees, and you're letting the biggest players in the economy work to grow your money. All right, moving on to our second strategy, high-yield savings accounts. I know, it doesn't sound as exciting as the stock market, but hear me out. This is your foundation. It's the financial equivalent of building your house on solid rock instead of sand. In 2025, the interest rate environment has made these accounts more attractive than they've been in years. We're seeing some online banks offer rates between 4% and even 5% AP. Let's put that into perspective. A traditional savings account at a big brick-and-mortar bank might give you 0.01%. On your $1,000, that's a measly 10 cents a year. But with a high-yield account at 5%, you'd earn $50 in a year just for letting your money sit there. It's a risk-free return. This is the perfect place for your emergency fund or for money you plan to use in the short term, maybe within the next year or two. Your money is FDIC insured, meaning it's protected up to $250,000 and it's completely liquid, so you can access it whenever you need to. It's not a get-rich-quick scheme, but it's a smart, safe way to make sure your cash is outpacing inflation and not losing its value. Let's talk about our third method, which is a fantastic way to generate passive income, dividend stocks. What if I told you that some companies will literally pay you cash just for owning their stock? That's exactly what dividends are. These are typically large, well-established companies with a long history of stable profits, like Coca-Cola, Johnson & Johnson, or Procter & Gamble. They've reached a point where they generate more cash than they need to reinvest into the business. So they distribute a portion of those profits back to their shareholders. That's you. These payments usually come every quarter. So with your $1,000 invested, you'd start receiving small, regular checks. Now, here's where the magic of compounding happens. You can take those dividend payments and automatically reinvest them to buy more shares of the same stock. Those new shares will then earn their own dividends, which you reinvest to buy even more shares, creating a snowball effect. Over time, this compounding can dramatically accelerate your portfolio's growth. It's like getting paid to invest, and it's a powerful strategy for building long-term wealth. Now for number 4, an option for those with a higher risk tolerance, crypto and digital assets. We've all heard the incredible stories, and yes, the crypto world can be a wild ride. But if you have a genuine belief in the future of blockchain technology, dedicating a small slice of your $1,000 here could have a massive upside. We're talking about established players like Bitcoin and Ethereum. Think of Bitcoin as digital gold, a store of value, and Ethereum as the foundational layer for a new, decentralized internet. The key word here is small. Because of the volatility, you should only invest an amount you would be completely okay with losing. Never bet the farm on crypto. But for that speculative part of your portfolio, say $50 or $100 out of your $1,000, it could be a strategic move. The potential for a 10x or even 100x return exists, though it comes with significant risk. Do your own research, understand what you're buying, and see it as a long-term bet on a transformative technology, not a lottery ticket. Okay, let's look at strategy number 5, which is fractional real estate. For decades, the barrier to entry for real estate investing was massive. You needed tens, if not hundreds of thousands of dollars for a down payment. Not anymore. Thanks to technology, you can now become a real estate investor with as little as $100. Platforms have emerged that allow you to buy shares or fractions of residential or commercial properties. Here's how it works. A company buys a property, like an apartment building or a rental home, and then sells off shares to individual investors through their online platform. You can take your $1,000 and spread it across several different properties in different cities, giving you instant diversification. You then earn a portion of the rental income collected from those properties, paid out to you as dividends. Plus, you benefit from any appreciation in the property's value when it's eventually sold. It gives you all the benefits of real estate cash flow and appreciation, without the headaches of being a landlord. Now for number 6. And this might be the most important investment you ever make: investing in yourself. Peter Lynch, the legendary investor, once said that the best returns often come from investments you understand. And what do you understand better than yourself? Taking that $1, and using it to acquire a new skill can have an almost infinite return on investment. Think about it. You could buy an online course on digital marketing, coding, graphic design, or copywriting. You could get a professional certification that makes you more valuable in your current job, or allows you to switch to a higher-paying career. You could buy books, attend a seminar, or get coaching. A $500 course that teaches you a skill allowing you to start a side hustle. Earning an extra $500 a month pays for itself in the first month and continues to pay you for years to come. Unlike stocks or real estate, knowledge can never be taken away from you, and it compounds with every new thing you learn. Never underestimate the power of investing in your own capabilities. Finally, number 7, start a small business. In 2025, the tools and platforms available have made it cheaper and easier than ever to become an entrepreneur. And yes, you can absolutely get a business off the ground with $1,000 or less. Consider a dropshipping store where you sell products online without ever holding inventory, or an Amazon FBA business where you find a product, brand it, and let Amazon handle all the storage and shipping. You could even start a content-based business like a YouTube channel, a blog, or a podcast. Your initial $1,000 could go towards a decent microphone, a camera, editing software, and a simple website. These ventures require sweat equity or time and effort, but they have the potential to scale from a small side hustle into a full-time income stream. The key is to find a niche you're passionate about and to stay consistent. Your small initial investment is just the launch pad. So, there you have it. 7 distinct paths for your $1,000. Let's quickly recap. We have low-risk, beginner-friendly index funds, the safe and steady growth of a high-yield savings account, the passive income machine of dividend stocks, the high-risk, high-reward world of crypto, the accessible route to property ownership with fractional real estate, the life-changing power of investing in your own skills, and the limitless potential of starting your own small business. The most important takeaway from all of this is to simply start. Don't let the fear of making the wrong choice paralyze you. Even a small step in the right direction is better than standing still. That $1,000 has the power to change your financial future, but only if you put it to work. I'm curious which one of these strategies resonates with you the most. Which one would you try first? Let me know down in the comments below. I'd love to hear your thoughts. And if you got value from this video, please give it a thumbs up and make sure you subscribe to Meter Money for more practical tips to grow your wealth and achieve financial freedom. Thanks for watching. and I'll see you in the next one.